Welcome back, ladies and gentlemen, to the Pump and Dump Dream. We're going to be talking about the broader market. What could potentially be a pump and dump in this very moment? We're going to be talking AI stocks. We're going to be rolling back and kicking it off with the crypto because there's been some big dumps happening over the last week and some that I think are honestly well-deserved. Some very famed people that I've been following for a very long time finally rolled over. We're going to be talking about the housing market. There's been more intriguing pump and dumps that I think are happening unsuspectingly that more probably related to the Canadian markets. We'll maybe talk a little bit about the US debt, and then finally some stocks that I love right now that have earnings coming out just in the next, I think next week we're going to have some big earnings on a couple stocks that I think are favorably undervalued at this point. And yes, I love talking stonks, baby. This is going to be a well-rounded conversation, but we got to start off first and foremost. How do you recognize a pump and dump? How do you make money from a pump and dump? I mean, I think it's changed since I started investing back in more of the 2012 to 2014 timeframe. And I'm going to kick off by showing one of my favorite examples of a pump and dump. And it's not like you think, because I think we more or less think pump and dumps as a stock goes up because someone hypes the crap out of it, and then they immediately take all the profit, rip the rug out from under you, and the stock just tanks, or crypto or whatever. But I don't think that's the nuance of pump and dumps. I think because there's so much capital in the markets and hype can just build and snowball so dramatically that it doesn't happen overnight like we would suspect. And I think what got me into investing in the number one stock that I bought, literally the first stock I ever bought, was Canopy Growth Corp. And it blows my mind that I was buying this thing for $2 to $3 a share back in the 2017. I think maybe it's even, I don't know how far back, maybe even as far back as 2014. I'd have to double check. I've been in the markets for too long. Nonetheless, I think this is a prime example of how things just become overhyped and the dump just exuberates into the future because the hype, like obviously the company couldn't live up to the hype. And I think we've seen that over and over and over again from so many sectors of the market that even I have been a victim to some extent, whether it was the special purpose acquisition companies, crypto obviously being a huge one. And I think AI has the real potential to be the next big pump and dump because it just reminisces so much about what we thought with crypto. And I want to talk about a new crypto guide that the SEC is coming after. But first and foremost, we can take a look at the crypto bubbles here. And I'm going to talk about some ways that I actually plan on making money in the next crypto pump and dump. And I'm going to tell you exactly what the next crypto pump and dump is going to be. Now, I am a long-term investor at heart. I will always be a long-term cost average investor. That's the only true way to make money. You know, the guy that bought Procter & Gamble, no one hypes that up. No one cares about that. Berkshire Hathaway, who's hyping Berkshire? Nobody. But what actually makes money over the long run? So you need to look at these as short-term, mid-swing trade speculations, right? That's the more or less smaller cap realm of things. And we have that addiction. It's an itch in our body, baby. I've made most of my portfolio wealth from playing these kind of swing trades accidentally, unpronounced to my own knowledge. I was ignorant into them. And I'm really glad I take profit and I don't get too caught up because you just never know what tomorrow brings, but you can recognize hype. But I want to show you one hype play. If you look over, I think it's your right of the screen, you might see this little Hex coin here. There's a guy named Richard Hart. I was following this guy. I never bought Hex, but this guy reminds me of Pablo Escobar. And I'll explain to you why in a second. But crypto is kind of still phasing one of the worst eras that it's experienced when everybody was hyping up how this is the new future of currency. NFTs are going to replace everything to do with smart contracts, from the way we use banks to closing real estate deals, NFTs. And what happened? 99% of these things, I promise you, over the next 10 years are going completely to zero. And don't get me wrong, I do have some Bitcoin exposure and things like that, but nothing to a major extent out of speculating. But nonetheless, Hexcoin literally was one of the largest pump and dumps that became worth $1 billion plus. And now the thing is trading down 0.006 cents. This thing has completely been utterly destroyed. But the guy that ran this literally might as well be Pablo Escobar to a different extent. But when the SEC comes after you, you know you've effed up. Now, today we charged Richard Hart and 3 of the unincorporated entities that he controlled, Hex, Pulse Chain, and Pulse X, with conducting unregistered offerings of crypto asset securities that raised more than $1 billion in crypto assets here, basically from investors. Right now, Hart called on investors to buy crypto asset securities and offerings that he failed to register. He then defrauded those investors by spending basically a Ponzi scheme, spending some of their crypto assets on exuberant luxury goods. This action seeks to protect the investing public and hold Hart accountable for his actions. When you get the SEC knocking on your door, you know you effed up. You know, because they don't make these claims unless they're very confident in what they are doing. So take a look at this, because I saw some videos I'll share with you. These are just some highlights a YouTuber put together by the name of Garrett. And I think this just offers some insight into why I think he's more Pablo Escobar-ish. And he just tries to act like he is the king of the hill rather than obviously dumping a lot of those coins, not explaining where he was getting the money from and buying an insane amount of luxury. He had like a line of watches behind him and he'd gloat about them all the time, you know, just raving just to get you hyped about like how revolutionary what he is doing. I mean, that's one of those plays in the pump and dump sectors, right? Like, let me show you all the wealth I have, whether it's real or fake, to get you to buy my stuff. I mean, that's very similar in the stock market with these, you know, high valued influencers. But take a listen to this.
Any of you guys from the SEC are listening, I hope you are. I want you to know in the deepest parts of your heart that I've saved a lot more people from being wrecked than you have. Because I did everything I could to prevent people from putting their money into BlockFi. Did you? I did everything I could to prevent people from putting their money into Celsius. Did you? I did everything I could to put people in charge of their own keys and get them to have self-custody. Did you do that? I called the top on the day. Did you? What have you done? So I break my balls to save people. I'm warning people about bad dApps, fake airdrops, showing people constantly every single hack that happens, right? I hand out free coins out the yin yang. I created free coins, give them to Bitcoin holders. Now I'm creating free coins, giving them to Ethereum and every single ERC20 holder. I'm the giving tree of crypto. I raised $27 million for charity. You know what the SEC did? The SEC got paid $50 million by BlockFi for suing them. And guess where the $50 million came from? It came right out of the money that would have been used to pay people now.
This might as well be Sam Bankman fraud. You know, it doesn't matter how much money you're giving away. It's how you're accumulating that money and whether it's done legally or not. And it's such a deflect. It's literally the Pablo Escobar play. It's like, I'm going to do something that I know is shady as AF, and I'm going to take that money and then try and shield all this crazy luxury goods that I'm buying by giving a lot of that wealth away to the peasants. And just, you know, we'll give it to charity. We're going to give it to this guy and that guy. I'm a good guy. Look at me sitting in my palace, but not going to tell you where this money's coming from.
That they're bankrupt. What? Hold on a second. So now the people that are hoping to get made whole in the BlockFi bankruptcy have $50 million less to get made whole because the SEC yanked it. That sounds like the opposite of helping people. That sounds like hurting people to me. And then you hear, like, I try to make the world a better place for people. And I just wish the SEC would use its power to screw up all the obviously evil, horrible things that are going on instead of attacking the good people. And you're just like, why? Why not attack all the horror? There's more than enough horror to go around.
Who would have thought that launching a $1 billion Ponzi scheme and using the proceeds in order to buy luxury goods, to flash that for marketing, that's a good idea, that this will not raise any eyebrows?
Yeah, I don't know what Richard Hart was doing. I think maybe he had the right intentions at the start, but the problem is like he was clearly ripping money from the crypto itself and like utilizing that to major extents. It's not like, because it's unregulated. That's what you got to understand, right? Like, it's not like the stock market where you have binding rules with the government and the SEC about when you can sell, how much you can sell, and how you can manage it. Whereas with crypto, you can take what you want when you want, rug pull when you want. And finally, they just cracked down on it. And they said, you know, there would have been probably better ways of going about it. But nonetheless, I don't want to spend this whole video just talking about crypto, but I'll give you one insight into where I think the next crypto pump is going to be. And I've noticed there's been a few channels I follow that have talked about this. And because I'm an avid gamer, I don't think people can appreciate the reality of what gaming is going to do to the entire NFT and crypto market. And nobody's really paying attention to this. And I'm telling you, if you want to just mark this. I'm not going to get into it. I'm not going to make this technical. Who cares about crypto? I know. But there's going to be games coming out like from Dr. Disrespect that have a highly anticipated idea of actually making games profitable and utilizing in-game NFTs for the first time in a practical way. And if this stuff kicks off like Fortnite did and it gets tens of millions of players from some of the biggest streaming gamers known on the entire planet, I'm telling you, this stuff is going to bump right away, and then it's going to do what every pump and dump and swing trade and basically trend investor dreams of, which is a perpetual growth to overhype before an inevitable sell-off, right? So again, you should, if you're into this stuff, again, I know a lot of people aren't, so I'm not going to drown you out by talking about some of these games, but if you want to do a little research, maybe I'll talk about it in the future, but I'm going to try and play this trend. It's not something that happens overnight. It's on the back burner, and I will be paying attention to it and put some money into it when I think it's relevant and what I'm going to be doing with that money. You can subscribe for those updates, but let's pivot a little bit into what people care about, what's actually going on today. And that has a lot to do with AI. And I want to talk about some of the AI plays themselves, what might be a pump and dump, overhyped, just garbage. And it's going to get me a lot of hate because every time I talk about this stuff, people always kind of just give me hate, but it's just recognizable. I was planning on actually playing some of these, and I was going to do it until I decided to do this big real estate purchase, and it kind of just drained my funds and my risk tolerance until I can start rebuilding. And I'm actually done with all this stuff, and I've got some stocks on my list I really badly want to buy by the end of this month, hopefully. But TSM is one that I did hold that I eventually sold off. Taiwan Semiconductors is the largest play in basically chips. And everybody knows this is the oil to the AI revolution. This is the future of everything. It is the backbone of every AI hype crap, every technology company, AWS for Amazon to Microsoft Azure. Like, these are the companies that are flowing this. And the reason that I ended up selling out of Taiwan a little earlier than I probably should have, I made some profit on it, which was very fortunate. But a lot of people kept saying I was trading too much. I didn't have the confidence in it because I didn't trust the market. This is the first market I've ever seen where there's extreme inconsistency in these revenue growth numbers. And Taiwan Semiconductors, for in a time where we should see explosive growth in chip usage, and we are seeing it to some extent, but for this being the backbone to even the most advanced chips for the likes of NVIDIA, I've been blown away that quarter over quarter, this company's actually been seeing declining revenue numbers, similar to what Apple's doing. It is a conglomerate in its own space, but this scares me, right? Like, this doesn't paint the prettiest picture from the one that's actually like sending the main primary functions of the silicon chips off to places like NVIDIA that'll remanufacture those primary silicon chips into the actual, like, you know, NVIDIA graphics cards and all that stuff, like the final finished product, right? And even Apple is buying from them, right? I mean, they're a huge player, but what's really neat too is ASML. The two major players, ASML and TSM, are the only companies you have to care about realistically in the chip sector, because ASML builds the machine that etches out. They take a piece of plasma light by shooting that aluminum or tin or something at like a crazy speed, laser it, explode it, and then lay it into like a flat disc, and then explode it with another laser into plasma light. They narrow that plasma light down to like the 1,000th width of a human hair, and they etch in the little transistors. It's a very complicated and magical process. It's more complicated than any machine we've ever put into space. People underappreciate the value of a company like this, but I am going to talk about the risks with these kind of companies. Now, I do like this stock a lot, and somehow it has been cushioned against the blow of the market just because everybody needs chip manufacturing machines. They're willing to jump head over shoulder to buy one of these $250 million machines, because that's what they typically sell for. And their net sales are still going up year over year from 5.4 billion to 6.9 billion for 2023 at the in July here. I mean, these are a pretty astounding growth rates for the 6-month end, from 8.9 billion to 13.6, and their gross profits are insane. I mean, 6.9 billion on 13. I mean, they're almost at 40-50% gross profit rates. This company is absolutely astounding. It's a Dutch company, pretty amazing. But what fears me the most is some of the stuff that even Warren Buffett said about it in like the long-term trend. And don't worry, I'm going to get into the AI stuff that I'm defining as some big risks for investors. But Dumb Money made a video called the LK99 superconductor trade of a lifetime. And there's companies, and I think this is in Korea, where they managed to make a chip out of some new technology that was way more advanced. And we've also talked with Amazon. They're looking at building super advanced chips using diamonds. You also have, you look at like the likes of Google that are making these crazy supercomputers that are utilizing things beyond, like, I think there are super states of like, it's very complicated technical stuff. But if one of those things take off, it can completely devastate the entire chip industry, because everybody's going to chase the next thing that allows for that next jump in computing power. And this is stuff that just goes so far beyond me that it's hard to sit here and think long-term about it. Like Warren Buffett said, he's like, there's a lot of risk within not understanding, you know, what the next big jump is. But if you understand what it is, you can make a lot of money. So there's some extreme risk in some of these companies if you're looking at a long 30-year time horizon, right? Because you got to remember, I think what was the largest chip company in the US from Silicon Valley, where the name came from? It was one of the I'm having a hard time. I think it was either Intel Intel or one of the other ones. I know it. I saw the tip of my tongue and I can't remember. I don't think it was Intel though. But nonetheless, those companies have come and go and ebb and flow. It's just a very volatile industry, right? And again, Nvidia I think has the potential to see. I'm waiting for Nvidia earnings to give more insight into like what's actually going on. Is this overhyped garbage? Has it been the golden child of the entire chip industry? The problem with Nvidia is it actually has revenues. It actually has bottom line. So this thing always trades with extreme volatility, and it's really hard to tell if this thing, I think it's overvalued here, but I don't think it's going to zero anytime soon either. However, the one company I do think has real potential to screw investors over, and this is the one that I wanted to play when I had money. It was on the buying along. I wanted to get Tesla at a good time too. But again, things change. Can't make every decision in your life work out. But Palantir stock, and I'm going to get a lot of hate for this because I know people absolutely adore Palantir, but I just want to talk about the risks with this company and why right now it's in this pump phase. And it is a pump right now, and earnings are coming up that will prove if this actually has some solidified value to rally to those next highs, because people are holding it thinking, first of all, I don't think anybody actually knows what they're doing. I think most people buying this think it's just some crazy awesome tech that the government's using, but they've never actually used it themselves, and they don't understand the competition. They don't understand anything about language models or how AI and these data centers take all that in and actually spit it out into margin increasing valued software, right? But here's Alex Karp, and this is where I really think the pump came in 2 months ago that really helped derive the value of this company where it sits today. And then again, I'm going to tell you what the actual value is, and then we'll talk about where it's going here. But take a listen, because this is very insightful from the 2 month ago leading into this final quarter earnings.
Enterprise. I've been at this for about 20 years, and I know it will take everyone else 4 or 5 years to build this. We're rolling it out. Our customer base is large, and we have, usually we wait we have to go out and find people. Now we have customers, especially in the US, just calling us every day.
You said the demand is huge. Yeah. Can you quantify it in some way?
Usually we've had a number of inbound calls in a year that we usually have in a year in like a month. And then if you were at a conference, if you go next door, there are customers showing potential customers how to use our product.
In a demo sense.
Well, it's on real data. It's things that they've done. So right now, the whole world is hungry for something that it understands as AI, which is really AI or large language models.
Firstly, nobody understands AI, but businesses are starting to, which is what he's kind of discussing here.
We actually have customers using our products, showing other customers how to do it. I mean, this is like you release a song and everyone is playing it. It's like, okay, great. We're very happy. And, the thing is, the U.S. market is just hungry for innovation. It's hungry for things. It's now beginning beginning to understand it needs like an ability to map an LLM onto your enterprise securely, ability to enhance the output of a large language model, and what's the output? Better margins, better safety. You can change your enterprise in weeks.
So he is not wrong by any metric here, but he's stating a lot of things that I think investors overlooked, which first of all, they think they're 4 years ahead. Now, this is kind of reminding me of Tesla and Elon Musk. Like they're in an industry where it's very hard to catch up to. But when it comes to software isn't a thing where I think it's just so patentable and you have some secret sauce that nobody will ever understand. I think it just comes back to like competitors when you look at things like Shopify and Block. Like when you have something good, people are going to start ripping it off and doing it cheaper, right? And that's like some of the future forward-looking concerns. So the question is, can they build enough of a moat, get enough of a client list, and build and bake in that moat, right? What is their actual moat? Because right now, this is all we're basing their value off of in this current quarter. And I'm telling you that from fact, because the reality is their sales and marketing has increased quarter over quarter, and it isn't baking into new record revenue growth rates. So I'm hoping that from the last quarter, he's not lying, right? Like he's saying now all of a sudden people are knocking on our door. Now all of a sudden there's all this crazy demand. So if they're still increasing sales and marketing and not seeing that hit the bottom line, then clearly he might be pumping the stock a little bit, And when you take a look, I don't think people recognize enough that they're not making any real money from AI. They're making all their money from diluting the crap out of shareholders from coming public. They came public at the best possible time. The stock hyped way too overvalued. People diluted the living crap out of you guys in the beginning. They raised tons of money. And if you take a look, their net, what you want to look at here is the interest income, right? The interest income is astounding, right? Interest income of what is that? Are we talking about the millions here? $8.8 million. I mean, am I saying that right? Thousands in the millions. Yeah, I don't think we're talking crazy amounts, but they're making more money right now off their interest than they are off AI. But that's controllable. Because I think you got to understand with gross profit here, their gross profit is huge, and they're losing it to sales and marketing, research and development, their general and administrative costs. These are controllable. But the question is does Alex know what he's doing enough to pump the stock that he'll wickedly wipe down some of these expenses and pump that bottom line EPS, that net earnings we see down here? Because if he does not play this correctly, and I think the man might be smart enough to, this stock has the real potential to dump dramatically, because the stock should realistically maybe be worth somewhere between $5 and $7. That was the value play to cost average, where I don't think most people actually bought it. Probably most people bought it overvalued. They may be scared to cost average at the bottoms, and now they're just breaking even on it. But anybody that bought those bottoms, congratulations to you. If you've over doubled your money, as I've stated, anytime that happens in less than a year, you take profit. Pull your money off the table that you initially put in, let the rest ride, and see if it takes you to the freaking moon and back, baby, because it very well could. But there's so much fear in that. And it just comes back to the point that this company, and again, we're in a slower market environment. This could change, obviously, as the market picks back up. But the company is generating over 12-month trailing almost $2 billion, right? But that growth rate has now dropped down, still in the double digits, which is really nice to see at 17% here. Sorry, and you can see that, right? I mean, the double digits still amazing compared to even the likes of the mega caps. But if this company is going to get on the S&P and continue to grow at like exponential rates, it'd be nice if that demand that he's talking about actually starts pivoting this back up, which is hard when you're bringing in like $500 million a quarter, right? So these are the things you kind of got to pay attention to with these kind of companies, and they're better off being swing trades than I think the potential of a long-term investment. And if you want it as a long-term investment, then sit down and ask yourself the serious question: have I done enough research in this industry to know what their next biggest competitor is? Have I done enough in this industry to actually understand how these large language model works? Because I just don't think anyone buying it does. They're just buying it for the hype. And they're getting sucked into it like they did with crypto. They're getting sucked into it like they did with a lot of the SPACs. They're getting sucked into it like they did with the marijuana markets. Like all of those have the very similar vibe to what we're seeing here. And you can't tell me it doesn't. I mean, again, I'm not trying to say this is a bad stock by any metric. It could be a huge play into the future. It's just highly speculative in the current macro. So just give it till the next quarter and just see what this looks like. Because I'm telling you, the earnings come out next week, and it is going to be a fascinating roller coaster of a ride. So AI, this is just the one stock I wanted to talk about. There are many in the small cap realm of things. So just be cautious. Make sure you know what you're doing, because I just don't want people to get wrecked. I lost money playing some of the hype plays, but I'm so glad I kept that risk mitigated, and I walked away with way more gains than, again, on a percentage basis, than even the likes of the guy that lost $3 million, of course, Jeremy from Financial Education. But I do want to talk a little bit about housing. As somebody that just purchased real estate in one of the most expensive markets and out of control markets on the planet, being Toronto, which I'll do some updates on tomorrow, because we finally closed on the place, and we're just in my last day in this place, moving there tomorrow. So there's something interesting going on that I've noticed. I was talking to a construction guy, and then I saw some TikToks, ironically, after talking to this construction guy, and he says there's something funny going on. He's like, in the first time ever, new construction builds in most major cities are selling for more than old builds. It used to be older buildings you used to be able to buy at a higher value than you could buy, brand new construction that's not going to be out for 3 to 5 years. That's pivoted. All of a sudden, it costs more now to buy new construction than it does to buy a property that's already been on the market for a couple of years. And that is something that we actually haven't seen before. And now all of a sudden, in a market where people are crapping their pants because they don't want to pay these crazy premiums, people are scared they locked in too high of mortgage rates, and they probably can't close on maybe some of these new construction, that all of a sudden there's fires. There's constructions just lighting up. This is another potential pump and dump that could happen in the market. Now, obviously, I don't think real estate's going to crash by any metric, but there are aspects of the market that are crashing in real estate, like offices. Offices are about to go through the literal hellfire of who comes out of that alive. I don't want to make the bet, but from New York to Toronto, offices are literally back to the 2008 financial crisis. And I just don't think that is a place that I want to park money until I know what's going on, no matter how good the value looks. But when it comes to this, man, I laugh so hard that people are like, why are all these new builds catching fire? It's who's throwing a match on them? Because the insurance company is going to pay out the difference. So I'm really curious to see what's going on with that. But the funny thing too, right, is I can't imagine that Canada is the only one experiencing these kind of housing problems, because the U.S. has supply and demand metric problems. Canada has these major supply and demand problems. But our government right now, if you're U.S. watching this, it is going to become a political shit show over the next week. This guy just divorced his wife. Not that I care. I'm not getting political. I'm not getting political at all. I don't care for conservative. It's just all the same crap to me. I don't make investments based off this, but this storm going on with this guy right now is just almost freaking laughable. I mean, the dude is the second, I think, prime minister to divorce his wife while he's been in office. And the first prime minister to divorce his wife during being in office was his dad. So he's following the family the family tradition here, but he made statements that have just completely wrecked the soul of Canadians.
And I'll be blunt as well. Housing isn't a primary federal responsibility.
When you think what is the number one issue facing Canadians right now, of course, inflation and the cost of living is at the top of that list. But what about your housing? Housing is everywhere. You talk about it municipally.
So the problem, I don't want to get too extended into this conversation, but the problem is they've immigrated. And I think last year they brought in like 1 million immigrants, yet they only built 300,000 homes. So there are so many homeless immigrants coming in now. Oh my God, I got to point this out. We were just talking to the guy that was setting up our internet from Rogers at our new place this afternoon. And we were talking about housing and just how we managed to pull this stuff off. And like, we felt bad for the guy because he doesn't live here. I think he's from Africa. And he said he's moving back because like there's no opportunity here anymore. It's just too out of control. And I'm hearing that again and again. I know we talked about moving to Alberta. There were so many people that I've been watching videos on that moved from here to Alberta, but because so many people thought the same thing and did it, now they're having a hard time getting jobs there. This poor girl was like, we moved here because it's cheaper and more affordable, but it took me 4 months to find a freaking bartending or a waitering job because there's just too much people flooding in all at once that like, it's just, what a mess. What a friggin' mess like the housing market is here right now. And talking about another mess that I can't understand. Have you guys seen this? When we're talking about the U.S. debt being re-rated, I talked about this during the week, and we've had two kind of controversial opinions around it. Kevin O'Leary came out saying this is going to be one of the biggest things to ever hit the economy. But meanwhile, Warren Buffett, I quoted that he's been buying $10 billion in treasury bonds last week, purchased another $10 billion this week, and literally says that you should never have to worry about this stuff. If there's one thing to worry about, it's not this. But then Kevin O'Leary comes out and says crap like this.
For them to say, okay, I've seen enough. Now, for me and you, or anybody at a kitchen table in America, your car loan just went up from 5 to somewhere between 7 and 9%.
Really?
That's not going to help. So the cost of your loan and your borrowing and your mortgage going up, period.
Okay, so that's on the economic side of it.
So I didn't understand that. Do you guys understand how that works? So I guess if they get, and who controls that? Like, who's this company Fitch rating? They go in and say we're downgrading it from a AAA to an AA plus, and now all of a sudden that means because debt that you're borrowing is underrated, that your car loan goes up in the middle of already loans going through the freaking roof. I don't understand. It blows my mind. But maybe Kevin O'Leary knows more, obviously, than I do. But I'd love to ask you guys what you think about that. Because when I look at the US dollar and I follow this religiously, it has been trending down, obviously, even though interest rates have still been trickling up. But honestly, in the perspective of the global view of the US dollar, it still reigns supreme. It is still at a high we haven't seen since 2001. The dot-com era. Like, it is holding highs globally, proving that the US is still strong, stable, stabler than ever, really, when you looked at Amazon earnings, right? But before we look at these three companies that I really, really like, stocks that I want to buy, they've been on my buy list. My parents are moving into retirement, and I really want to talk. I'm hoping maybe my parents might sit down and have this conversation. I don't know how in depth they'd be willing to discuss, but I think it's a conversation most people want to have about getting to retirement in a market like this, what stocks they would be interested in building their portfolio around, and obviously, you know, just kind of frameworking a lot of different stuff around this. But I want to answer some of your comments and questions here, and then I'm going to show you a few stocks that I'm highly intrigued by. We'll start from the bottom here, see what you guys are doing. We'll work our way backwards. Treasury still have to compete in the bond market based on the bond market. Yeah, I really don't understand the U.S. bond market at all. U.S. is still the king. If they get downgraded, so does literally everyone else. I would agree. That's why I don't understand it. I think it's just Kevin O'Leary just trying to stay relevant. Does it even make sense to purchase a condo in Toronto? Again, this is a very personal finance question. No, it's probably not worth it for most people to purchase a condo or a house, I think, in Ontario in general. For us, we were in this position where they're going to pay $40,000 a year for rent, or because we had the capital between me and my fiance to make sense of the fundamentals following the basic rules, which is, we wanted to make sure we had a fully funded emergency fund after putting our deposit. We wanted to make sure after we put our main down payment onto the house that our total monthly expenses weren't any more than like 50% of our entire income. Our total housing expenses aren't any more than 30% of our income. So for us, for the place that we bought for around $700K, made perfect sense. Again, that's not going to make sense for everybody. It's a real personal finance question. And I still think for most people, it's probably not worth it. But you have to run that math. And again, it depends on where you live. We sacrificed that crazy amount for 1,300 square feet just to live close to family. That's the only reason we did it. Family matters more to me than perhaps getting on a plane and living somewhere cheaper. I could have retired probably this year if I just moved to Alberta. I mean, we would have had, between me and my wife, I mean, like, we had a substantial amount of assets. But again, I can't sacrifice that dream for family. I just can't. My family's gone through too much. My home's here. I'll make it work. I'll make it work. I just got to, right? People burning down their houses because they can't afford the mortgage payments. Holy crap. Yeah, that's construction though, right? Because construction guys are dealing with the increased mortgage payments because they have to finance that construction and they ain't getting it from the deposits that these people put in because they only put 5% in. And then all of a sudden now they're, maybe if they had a 5-year outlook, now they're 2 years to finishing, their interest rates went through the freaking roof, and they can't, through all that inflation where they had to pay so much extra for building materials. Now all of a sudden they don't trust that people can afford the homes. They might not be able to close. So what do? They light a match. They let the insurance cover the damages. They get a payout. They got their hands free. I don't know if it actually works that way. I am speculating greatly, but I did talk to a construction guy that brought it up to me. And he said, it's very interesting that, all of a sudden we've seen more fires than we ever have from pre-construction. That could just be the weather too. Who knows? Has Palantir made a profit yet? Yeah, like 1 cent. Mostly from high interest income off their money, not their business. What do you think about RISC, Qualcomm, and Intel are getting into it? I will have to take a look, sir. That would be a deep dive for another day. I do want to get into these few stocks that I do appreciate, but I will look into this and perhaps bring it up. Extreme Ultraviolet. Yeah, that's the thing when we're talking about these chips, right? I don't understand any of that. I did go so deep down the ASML rabbit hole that I fell in love with the idea of the company and I follow it religiously. And I really got a good idea of how machines work in the industry. I think it's fascinating. Anyone should watch it just from an educational standpoint. I mean, if I could go back to school, I swear to God, that would be the job I would be aiming for, is chip manufacturing. It is the underground oil. It's so insane how underappreciated it is when we just look at the software in these big mega tech companies, when really the underlying fundamentals are chips. Side note, how's your house hunt going? I grew up in the GTA. Yeah, so we just mentioned we did just close on a property. I will do a full video on it tomorrow. I'm not going to get into the numbers. The numbers are going to be safe for Patreon members only. My fiance is a little bit more skeptical about sharing all that information, but I have got the green go ahead that I can talk about it with my Patreon members just to keep it a bit more private. What else we got here, guys? How come, and before we get into these stocks, how come you don't talk about these psychedelic stocks anymore? So I still look at it. I just don't talk about it as much because I can't find a play in it where it makes sense. So for those of you that don't know, one of my biggest trades in literally my entire investing career was MindMed. And MindMed, let me pull this up for you. It was, I wish, it breaks my heart that these companies went through that hype phase and just came right back down, because this is going to still, in my opinion, again, the problem with pharmaceutical and biomedical is it takes 5 to 10 years for this stuff to unfold. And in fact, we still hold shares in MindMed. Again, I have a real deep place in my heart for this, even though I took massive profits and walked away. I just can't bring myself to like really look into this until something starts to formulate in a way that makes sense. Because for right now, there's quite a few players. A lot of them are falling under because they can't get financing, but MindMed is still a pretty good leader in this industry. It's just a matter of waiting for these things to come into play. And I really think there's huge potential in them solving depression, anxiety, a lot of things are even probably related to OCD, ADHD. And I think this is going to change the world of mental health. The problem is no one cares anymore, just like probably most people aren't going to care about AI just as much as people don't care about crypto right now or the MJ sector. It's just these phases, right? So yeah, this still holds a place in my heart. We still hold shares in it. I don't talk about that as much as I probably should, because I think it should be pointed out that these mental health companies have real potential to change things. Yeah, I'm sorry about MindMed, man. I feel bad about the phase it went through, but at least we made some money on it for those that were following the channel. Nonetheless, law crypto is a pyramid scheme. I beg to differ. I think there are realistic applications, and that's why I'm waiting for the next hype phase that will be related to NFTs and gaming. That's what's going to launch it off before it hits the financial sector, before it hits smart contracts with real estate deals. I promise you, mark this video, mark my words, there is going to be a huge comeback in crypto. It's just not going to be in the way most people think it is. It's going to be in the practical way, and it's going to be gaming. I'm promising you it's going to be gaming. The Fed US Worldwide, what else we got here? Fed USA Worldwide coin happening as you speak. Yeah, I wouldn't be surprised. Think about it. Crypto on a ledger completely removes, and I bitch about this all the time, taxes. Why do I pay an accountant when the stupid government audits my books and tells me that I owe them more money? That happened for 2020 and 2021. I got re-audited last year. If I have to pay more, shouldn't my accountant have some kind of insurance liability for effing up and not doing my books right? Why do I have to pay an accountant to have them re-look at it for me to have to pay more? Why? That could all be resolved by having one ledger, a digital asset, coin, cash. I don't care about cash. I am not a cheater to the system. I think most people, if they're smart and they like running legit businesses and growing, their own financial freedom, you can't do it illegally. You can't do it with cash. Cash is trash if it's not registered to the government and to the banks. You can't get loans. You can't buy real estate if you're bullshitting and working for cash. I hate it. I hate the idea of when people talk about that. So why not just ledger it, remove these stupid accountants, and set up a system that just does it correctly? I'd appreciate that greatly. Hopefully it comes sooner rather than later. I appreciate what you do, Kyle. Always fun watching your videos. Yeah, I get a little crazy on these live streams. Oh, let's get into it because you're right online, baby. I want to buy TELUS so freaking bad. I got some money right now. I'm just finishing up a few things, and hopefully in the next few weeks, I got to wait till next year to top up my TFSA now because they make you wait a year before you can recontribute. But I'll probably buy TELUS just in my regular accounts if I don't make my fiance buy more of it because she already owns a pretty big chunk of TELUS. This is probably one of the greatest opportunities for stocks like this. But maybe we'll just bring TELUS up because I talked about it today, and then we'll talk about two other stocks I'm interested in. TELUS, it does not deserve to be down here. I don't understand why it's been hit so hard. The earnings on this thing have been just mind-boggling. And again, they've been getting hit from a few things, doing some write-downs, amortization. They're dealing with the higher interest expenses, but that's just leading to a buying opportunity because this company is taking advantage of these million people that came here last year. I think I pointed this out, and I'll just re-highlight it. I did it in my video today. I don't want to be boring and repetitive here, but let me just show you for those of you that didn't see it, because if you just take a look at their investor presentations or their recent news release on their earnings, if I can find this here, let me just go back to their quarterly report. On that quarterly, I just can't get over that they hit a 10-year record on signups here. Let's just take a look at the PDF real quick. Can you guys see that? I pulled that up correctly. I don't even have it open. I'm sorry, my bad. Let me pull that open. So basically, total customer growth of 293,000, up 46,000 over last year, a second quarter record driven by healthy demand on our leading portfolio across mobility and fixed services. They increased the dividend, I think, at the beginning of the year, which is up 7.4% year over year. Like this company, man, I'm telling you, as it stands today, they can't afford the dividend. Everything about it just seems like a pretty decent opportunity. If you believe interest rates are going to go down, this company has a cushion against the interest rates going up because they have record growth. But the problem is just they're kind of battling this two-edged sword. But this is why I love infrastructure companies right now. And there's one other infrastructure company I like a lot. This is the second company next to Canopy Growth Corp that I bought when I first started investing in 2014. The two stocks I bought. Luckily, I did sell out of all of this, again, in the perspective of readjusting into ETFs at the beginning of 2022. And then, I don't even have access to this stuff because I liquidated it for real estate. But I'm glad I got out of it just because of the risk that it's been hit by with the interest rates, the slowing aspects of some economies. But still, this thing I think is getting to a place of extreme value if you care about the energy future. This company right now has the largest stake in a Canadian battery storage center. Because you know the way Elon's doing these huge battery storage centers? This company owns the largest one, the largest project in Canada when it comes to battery storage right now. This company is globalized with wind and solar, and they're paying almost a 5% yield, which we haven't seen since literally 5 years ago, back in 2018. Again, there are some risks with this just based off some of their recent earnings, but I'm going to break it down because this one has earnings coming out next week. I believe next week or the following week. So I'll be looking at this one a little more in depthly because I think this is a great dividend pay player. It pays monthly. And then finally, one that's overvalued that I really want to buy, that I have interest in, and I've been following this one on and off for a while. It's the top holding right now in the BMO low volatility ETF for Canada, and that is Hydro One. This one, I don't know if it's overvalued or undervalued. Honestly, I think it's trading for around probably a fair value, if not slightly over. But still, this is just what a stock. What a stock, man. This thing is a spinoff from the government in 2018. It's primarily transmission lines. Everybody pretty much uses Hydro One. They have millions of clients. We use them out where my parents live. They go all the way from Toronto all the way up north in the GTA. I just think it's such a stabilized player in hydro, whereas you don't have to get into the hydro producers. This one's kind of like owning the pipelines to hydro rather than actually owning the producers of hydro, like nuclear power plants, coal, or what we generally use, even like natural gas. And it's like Enbridge, because Enbridge does a lot of the natural gas, but they also own the infrastructure, the pipelines where they make most of their money. I like these infrastructure plays. I think they're a little bit more cushioned against any market volatility. But nonetheless, guys, I do appreciate you all showing up for the stream today. OG watcher, I love you, Jason. What we're going to have to do is, I know you're got some family out there in Yellowknife, but maybe perhaps one day I'll have to fly out. I'm getting nostalgic these days. I actually reached out to a lot of my high school friends that I haven't seen in about 5-6 years, and I'm trying to make time to see them all. Sadly, one of my really good high school friends, one of the only friends I still have from high school, he had an aneurysm at 32 years old when he was sleeping. And now he has to go get like chemo treatments done to reduce whatever issue he has in his brain. And my buddy, we just did his funeral, that passed away from cancer at 39. And I'm not trying to get like bleak or, macabre here in any aspect, but you realize again, the idea of family and all this stuff that matters more than money, and just trying to make time for these people. So I've been having great conversations with so many friends and OG people like yourself that I grew up with in high school. And it's been so, my buddy felt bad that I was getting nostalgic about it, but it feels good just reaching out to people, seeing where people are at, and, just making the time for that. Cause I think we get too caught up in our jobs and all this other stuff. But that's like my 2023, 2024 goal, is just to make time to help family, catch up with friends I haven't seen in 5 or 10 years, kind of do like high school reunion stuff, and just remind myself that again, I said this in the last room, life is short. So enjoy it while it lasts, because it's just a roller coaster ride that we have to get off and let the next person on eventually. Kind of scary to think that anything can happen. Yeah. And in aneurysms too, man, like you are just disposition to them. I don't know if that's the right word. Aneurysms just happen to people that are born with the wrong blood flow in their brain. There's no cause, rhyme, or reason for it. And it just blows my mind, because like otherwise the dude's fine. Like from a health perspective, he just literally had a seizure while he was sleeping, just gets up one day, just seizing out, and goes to the hospital. And they're like, yeah, so you might have 5 years to live. We're going to treat you with this chemo. And if you get through the next 5 to 8 years, then you could probably live the rest of your life. He's been taking it very chill, though. I got to give him that. He takes it way more relaxed. But that's I actually took those guys out to the Mario movie. We grew up playing video games together, so we had to all get together and go out to the Mario movie when it came out. Some super awesome memories. Yeah, No Warning too, man. That shit just comes out of nowhere. Yeah, it's crazy stuff. But let me not get too. I always go down the sad road. But again, I think it's a good reminder to investing, to always just remember why you're doing this stuff too, right? But stay cool, stay awesome. Appreciate you coming out this Friday, guys. Enjoy your weekend, and as always, I look forward to catching you in the next one. Peace.